Hyperscaler capital expenditure, or CapEx, has experienced an unprecedented surge, driven by massive investments in artificial intelligence, infrastructure, including data centers, servers, and most notably, NVIDIA GPUs. Here now with more on it is our chief equity strategist and economist, John Blank. And John, for those who may not know, what is scaling in AI models?
Yeah, Terry. I mean, like back in 1950, there was this thing called Theseus, which was the mouse, and it was trailing through a maze with 40 sides to the maze, like kind of like a corn maze in the middle of a field during October. And the researchers would bounce the mouse off the walls to teach the mouse, the mechanical digital mouse, a way through the maze. And so the data was the number of times you push the mouse against where walls to teach the mouse where the walls were. The parameters were the walls, and the compute, the third quality was the number of times you push the mouse through the walls of the data. So this is kind of like a data center writ large. You ask a question on Gemini or ChatGPT, how high is the Empire State Building? And you get the data, chasing through to the walls and all the learning that it has to do, and then the compute helping it bounce off the number of walls with as much data as possible to get the best answer. And that's really how this works, Terry, is scale, not research, is delivering better results for a large language model. That's why I call it large language models, because the larger the language model, the better it performs.
And what's the benefit of this and to whom?
The benefit is anybody who thinks AI is going to be really, really, truly effective when on biomedical research or figuring out an analyst report or writing a poem or whatever is going to benefit when the scale is higher with the better chips.
So this relates either directly or indirectly to the data centers being built around the country, correct?
That is the case, Terry. $600 billion is being spent this year alone, they say. You got to remember the United States is a $30 trillion economy, so it's not as big as you might imagine. But for a 1 year spend on just these data centers, that's showing you just how panicked and just how important the scale is to these giant cloud groups out there, the Microsofts, the Amazons, and so forth, to get this in place, because they're truly fearful that they're not going to be able to compete in this next wave of innovation.
How did CapEx over the last 2 or 3 years contribute to the slack U.S. job growth seen across all 12 months, especially of 2025?
Yeah, Terry. I mean, basically, you got a choice between capital and labor. And if you're putting up a lot of money into these data centers, you are probably not going to be as willing as a trade-off to pick in more payroll growth. So the focus has been so heavy on building this up so drastically. It's not that they're firing people, is that they're not hiring people. That's the low hire thing, not the low fire thing, but the low hire thing is related to these data centers.
So is this going to have a negative impact on the labor force for a time going forward?
We will see, Terry, that the downstream effects of AI have yet to play out, and that's what the market's jittering about. Is nobody really knows, and I think that's the fear you're seeing. Is at such high valuations with such euphoria, is it there are people just saying all of a sudden there's negative implications to this, and it's not all rosy. And I think it's probably appropriate for people to start thinking about it.
What's the impact to the overall U.S. economy?
Well, Terry, at this point, the number of job openings at List AI is 1.8%. So if the news flow is dramatic, of course, daily, and we're talking today. NVIDIA reported, and it was the only thing anybody talked about is NVIDIA. But in general, at the labor market level, it's only 2% of the U.S. economy in terms of jobs.
What about the impact of the global economy?
Well, the rest of the world is watching and playing a role in either contributing, like Taiwan Semi, in terms of back-end chips, or in the case of China, building their own tech sector, and the DeepSeeks of the world, and Alibaba having also their large language models, and other groups in China. So, it's really becoming, Terry, a two-part world for AI. It's the United States and China. And then, of course, Taiwan is playing a role, South Korea is playing a role in some of the in the arms supplying, picks and shovels context of all that.
So let's take a look now at a few of the stocks associated with what we've been talking about here, namely Amazon, Microsoft, and Oracle.
Yeah, let's talk Amazon. I got a $210 share price. It was 240 not so long ago, so it's sold off, and it's basically showing that basically no returns for shareholders for the last year. But if you go back to 2023, it was $100 a share, so making twice your money over 3 years at 33% return. So in general, this is Exhibit A of what's happening here. The returns were so strong on Amazon for 3 years that people have taken some money off the table, and it makes sense. PE ratio is 27, which is rich, and the last earnings surprise was minus 1.5 Terry. They actually missed. And this is part of that CapEx spending that they're getting their eyes off the ball on profitability.
Microsoft.
Microsoft. Let's talk about Microsoft. I got this share price at $400 a share. It was $550 not too long ago, 4 or 5 months ago during October. So here's a stock that fell $150 a share. But again, if I go back to 2023, it was $250 and now it's $400. So adding $50 a share a year on $250 is again, 20% annual returns, which is super good. But the froth is off Microsoft at this point in time, and the D for value speaks to that. There's just the stock PE of 24 is still too high. It probably has to come down even more.
And Oracle.
Oracle is the poster child of excess, Terry. It was $300 a share back in October when I started getting into this business. It's $150 a share now. It's been halved in price. But again, going back to 2023, I've got $80 a share getting to 150. So again, if you own it now over the last 3 years, you missed the super high at 300 that came around for a few months. But now you're still sitting on a nice profit and a gain of about $75 a share on $80 of share position, and that's close to doubling your money. So again, value score of D is speaking to what's going on here. The P ratio is 19.8, just a little under 20, and that's what's concerning people is that. This type of outsider, if you will, to the hyperscaler business, using debt to play the game, is in a poor competitive position to do so.
Our chief equity strategist and economist, John Blank, on scaling in AI models. With John, I'm Terry Ruffalo.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.